What's up, guys? We're over here in East Elmhurst. Beautiful, beautiful day. We have a special guest with us, Mr. Peter Karlin. I've known this guy for a very long time already, and he is the best in what he does.
Thank you.
So I'm very happy to have this guy with me today.
Thank you.
Yes.
Thank you. Good to be here.
Yes, sir. So what we're going to talk about today are the different types of ways a home buyer can finance their loans. But first, Peter, can you tell me a little bit about yourself?
Happy to do
The viewers
so.
know.
First of all, thank you so much.
Yeah.
I appreciate the opportunity to be here with you, and it's been phenomenal working with you over the years, and I very much appreciate you. So thank you.
Of
Thank
course.
Yeah, a little background on me. I started in IT. Actually, I was an IT person for many years, and then a little stint of acting. I had an acting career. I lived in Los Angeles and did some acting, and then I was set to be a big movie star. Unfortunately, that didn't happen. So I came back to New York from LA. I lived in LA for a while. I came back to New York, and I was looking for something that would turn me on, and something that I could make a difference, and that I was good at. And mortgages. A buddy of mine told me about mortgages, and I got into mortgages. It was in January of 2013. And first 2 years were a little rough. I didn't know, what I was doing, and just trying to figure things out. But it has been actually an amazing ride. It's been an amazing ride. So I love, it's, as you know, it's just great helping people get into there. A lot of first-time home buyers that we have getting into homes for the first time, and really rewarding. Get to make money, get to help people. It's a really cool thing. And I love numbers, and I've always liked numbers. So it really works well for me.
Amazing. So 12 years, right? About 12 years?
Yeah, about 12 years.
12 years. So I know you started off first, you working for a bank, and now broker, right?
Yes.
What was that?
Yes.
What was that transition?
So
what was that transition like?
It was the transition was awesome. I actually was, as you said, I was working for different retail banks over my first 10 years of being in the business, and then in January of 23, a year and a half ago.
Yeah.
Well, it was really before that I started getting beat by a local broker. Who was just offering these amazing deals and great interest rates to clients. And my realtors, a lot of realtors that I work with, were sort of starting to give business to this guy. And I was like, what's going on?
Yes, no good.
Where's the love? I was introduced to this young man, and I found out he was a broker. And I had always been told over the years that, brokers are, they charge more money, they don't get you as good deals, go directly to the bank. And that is so far from the truth, Josh, as you know, because now I've been doing this for about a year and a half, and you asked me how the transition's been. The transition was actually really super easy for me, because you're still doing mortgages. You just have to figure out going from a bank. I mean, I now have 80 lenders, 80 lenders that I work with. So the only thing is we don't underwrite in-house, right? We don't underwrite in-house, but I talk to underwriters. I get advice from underwriters, and it's been a great, and clients are so much happier as well as realtors, right? Because I have a lot more options for people now.
Amazing. Yeah. So with the banks, right, you're really locked into a certain amount, right? You're capped at certain rates, right? Certain numbers.
Well,
now you're more access.
It's that and loan programs, right?
Less programs.
Retail banks.
Welcome to Queens.
Retail banks just don't have. Retail banks don't have the flexibility, right? They don't have the wide array of loan products that, obviously, because I have 80 lenders, all these lenders do different things. Well, many of them do a lot of different things. So just a lot more options and better rate. I tell people, I say, I'm like, being a broker is sort of like buying from Costco or BJ's, right? Why do we go to Costco and BJ's? Because we want better pricing, right? Yeah, we buy in bulk, but we're getting wholesale pricing.
Yeah.
And I feel that's the same exact thing as being a mortgage broker, that I'm able to tell people that I'll give them that better pricing and that better deal.
Okay. Amazing. So you want the best deals? Come to my guy Peter over here.
Thank you.
Yes, sir. All right, so now we're gonna get into the products. Like you were saying before, you have a bunch of different types of products. So what's hot? What are you seeing right now that a lot of people, are going for?
I'll tell you what I really find is what we call non-QM, non-qualified mortgages. It's really like non-traditional mortgages. What's traditional? Well, when we talk about traditional, we're talking about pay stubs, right? Showing your income, pay stubs, W-2s, 1099s, tax returns, all that kind of stuff.
Okay.
Well, these days, and I don't know if it's the whole nation, to be honest. I mean, most of my business is New York and New Jersey, but I'm finding that non-QM mortgages are really hot. And when I say non-QM, I mean we can use bank statements, like if you own a business and you're self-employed, right? It's really very much geared to self-employed people in many respects. So
Okay.
if you own a business and you're self-employed, we can look at your bank deposits, right? The deposits that you make into your business account or personal account that are business related, and we can use those deposits in lieu of income.
Okay.
Right? So that's one way. We have a 1099 program, right? So if you're a self-employed person, you get 1099s. We can use 90% of your 1099, which is awesome.
That's awesome.
Amazing. It's amazing.
Yeah.
We also have a P&L loan, which is just P&L stands for profit and loss, and that's just looking at a profit and loss that's given to us from a CPA, an accountant, or an enrolled agent of the IRS. So that's a really cool thing. You okay?
Yeah, yeah.
Oh, okay.
I said, wow.
Okay.
Yeah, no, it's crazy, right?
No, maybe I can get
Yeah, no, 100%.
And so we have so we have the bank statement, the 1099, the P&L. Oh, and then here's a really hot one these days as well. If you already own a property and you're buying another property as an investment property, we call it a debt servicing product. Debt servicing. So what does that mean? That means that, and this is big in the commercial lending world, but a lot of people in the residential world don't know about it, right?
Yeah.
So what it is you taking the mortgage payment, and
Okay.
as long as the rental income covers the mortgage payment, you qualify, right? You get a mortgage. Crazy.
That's crazy.
We don't look at your
Wow.
income at all, nothing. But you have to own a property and you have to be buying an investment property. And for that product as well, you could also close in an LLC, which is very popular. People want to close in LLCs, right? Frequently. So those are some of the non-QM programs that we have out there. We also have actually another one. You know what else is big these days? HELOCs or HELoans, home equity line of credit or a home equity loan, right? And we also have non-QM HELOCs and HELoans, which are really super hot, right? And why are HELOCs and HELoans hot? Because a lot of people have first liens on their property, and those first liens or those first loans have really low interest rates, right? They got these loans many years ago. I have someone who's got like a 3%, 3.5%, and he's like, oh, I need cash out, but I'm not doing a cash out refinance because I'm not touching that first lien,
Okay.
right? So they get a HELoan or HELOC, a non-QM HELoan or HELOC. HELOC stands for HELOC, HELOC, home equity line of credit, right? Home equity line of credit. That's basically a line, right? It's a line of credit. So it's like a credit card. So the lender is giving you, based on the equity in your home, assuming you have good equity and you have good credit, they're going to give you a certain, like, let's call it $100,000 line of credit. And it's really cool because it's a line. So you can pull from it and put back, pull and put back, pull and put back. And you could do that typically for the first 10 years of the loan, right? Because how it works is typically it's an interest-only loan for the first 10 years where you can pull and put back and pull and put back. And when the only time you're accruing interest is when you pull money out. And when I mean pull and put back is, like, let's say I need $70,000 today to go invest in another property.
Okay.
I have a $100,000 line. I pull 70, so now the clock starts ticking on the 70,000.
Okay.
Now I have 30 left. I could pull, right? I got 30 left on
Yeah.
the line, or I could pay some of that 70 back, and I could put back and
Gotcha.
forth for 10 years. After the 10th year, then I have to pay back the loan. I can't go back and forth. And after the 10th year, it becomes a principal and interest payback. It's a principal and interest payback.
Gotcha. How high is usually the interest payments on that?
Great question. So typically, it's prime rate plus something. So it's prime plus a half, prime plus 1. What's the prime rate right now? It's 8.5. 8.5. So if it's prime plus 1, your rate's going to be 9.5%, right? But now here's the thing. Got to keep in mind that there's a high likelihood that rates are coming down in the very near future, right? So when rates come down, the prime rate's coming down. When that prime rate comes down, so is your HELOC interest rate, right?
Okay.
And then a HE loan, I mentioned the HE loan. A HE loan is a loan. So a HELOC, right, it's a line. You're taking from it and you're putting back. A HE loan is you're taking the money in one shot, right? So it's a loan.
Okay.
You follow me?
Okay.
So it's it's not 100,000 line, it's 100,000 loan.
So you have to take the whole thing out
in
one
one shot.
Gotcha.
You're taking it out in one shot.
Okay.
Yeah.
And you pay it back the same way. Interest is the same thing.
Same thing.
Same
It's
thing.
the same
Interest only?
concept.
Gotcha.
Yes. Same concept.
Okay.
Yeah.
Okay.
And there are different HELOCs that are we call it a draw period.
Yeah.
When I told you that 10 years, that's a 10-year draw.
Yeah.
There's some HELOCs that are a 3-year draw, 5-year draw, 7-year draw, 10-year draw.
Okay.
So yeah. HELOCs are frequently used for properties that you own. However, you can use a HELOC, which we call a piggyback. A piggyback.
Okay.
Now, how does that work? Well, let's say you're buying a property for $1 million, and you want to take a first loan at 80%, 80 LTV, we call it.
Okay.
Loan to value.
Okay.
LTV is loan to value.
Okay.
So we want to take we want to take 80% on the value of the property. So 80% of $1 million is 800,000. So my first loan's 800,000.
Okay.
Now I want to put down. I don't want to pay mortgage insurance, right? Because mortgage insurance is something that you have to pay if you put down less than 10.
Well, you're putting
less
20,
than 20%. Yes.
Okay.
But the first loan is 20%. But you're not putting 20. Why? Because there's a piggyback HELOC for 10%. You're putting down 10%, a piggyback HELOC for 10%, and 80% coming from the first loan. Right? It's kind of cool.
Yeah.
So that HELOC is serving as what we call a piggyback. Why piggyback? Because you're piggybacking on the first loan, on the first lien.
Gotcha.
Does it make sense?
I gotcha.
And it's a great product. It's a great product. I have someone using it right now, as a matter of fact. Yeah.
Very, very cool. So all these programs you have, right?
Yes.
Compared to the bigger banks that don't have,
Most of them
Well,
don't
usually
have this kind of stuff. Some do,
Okay.
right? But most of them don't. Most of them are doing conventional FHA, VA loans.
So with these loans, right, you were talking about, 1099, bank statements. Now, what about credit? Does your credit play a role into any of these loans?
Always.
Okay, always.
By the way, we also have loans for people who are not even legal in the United States.
Okay, yeah, we actually did that one, right?
Right.
Was
We
it
have loans for
international?
people. They work in the United. We have foreign national loans.
Yeah, that's the
We
one that
also
were
have
doing.
loans for people who have PTINs, right?
Yes.
Or ITINs, right? You have an ITIN, but you don't have a social. So, and people who are here not even legally, right? They work here, they have credit, but they're not here legally. Yes, we can even get that kind of personal loan. So, I'm so sorry. You had asked me about
The credit, right?
Oh, credit.
Credit. So
Extremely. So for I would say probably for 90 to 95% of the loans that we have, credit is important.
okay.
Right. And I can't stress enough to everybody, you know, watch your credit. Pull your credit at least once a year, because at least once a year, and you can go to annualcreditreport.com to get a free credit report with all 3 credit bureaus, Equifax, Experian, and TransUnion, because you want to see what's going on, right? Sometimes, you know, a lot of people, they don't even know what's going on with their credit. Or, you know, I've had a client who like had a Macy's card and they paid it off, right? But then the next month they got hit with interest from the prior month. And they didn't know about it, and they didn't look at their bill because they were like, no, I paid it off. I know I paid it off. But that interest of even 2 cents, you know, 3 cents, it doesn't matter. If you have an open balance, you have an open balance. Yeah. And if that goes 30 days late, you're 30 days late. And if you're 15, so just so you know, you can go up to 29 days and it doesn't hit your credit. But on that 30th day, that creditor, like clockwork, is going to hit your credit report. And you don't want dings like that on your credit report, because that kind of stuff stays for 7 years. It stays for 7 years. A collection, a charge-off, a late payment. And you know, that really brings down your credit score. And credit scores typically have a direct correlation to the deal that you're going to get, right? To your interest rate. Yeah. Right? Everybody comes to me, they want the best rate in town, right? They want the best rate. I want the best rate. I want the best. Okay, well, you got to come to me with the best setup, right? You got to come to me with 20, 30% down. You got to come to me with great credit. You know, you got to have all your ducks in order. So I always say, you know, you're great with bringing your clients to me, and it's always important that we sit down with people up front, because you got to do this analysis with people to make sure that they are set to buy a house. Exactly. And if they're not ready, hey, listen, if you're not ready, get ready. If it takes you 6 months or a year or 2 years to get your credit in shape and get your money together, get yourself ready. And then you go out and you buy a house, you know?
Exactly. So yeah, with everybody me and Peter work with, right, we set up a Zoom call with them, or we could do it in person, right? We sit down, we go over their finances first, because you have to know your finances before going out there.
It's like taking, you know, Josh, I apologize for cutting you off.
It's okay.
It's like taking a trip, right? If you're going to go on a trip, you know where you're going, right? And typically, I mean, sometimes people just say, hey, I want to go wherever. Let's just drive, I don't care. But frequently, we want to know where we're going, right? And you want to put it into your, you know, Waze or whatever, Google Maps, and we got to know this is our starting point and this is our ending point. It's the same thing for buying a house. You got to know where you're starting to know how you're going to end up and buy that house. So that's what we do. My apologies.
Exactly. No, it's all right. It's all right. Yeah. So finances is very important, and like he was saying before, you might not be ready right now, but what you need to do in order to get ready, right? Do you need to work on your credit? Is your credit in the low 5s, mid 5s? Right? Do you only have 20,000 in the bank and you want to save for, you know, 20% down to see what the different monthly payments are going to be, right? So all of that stuff's important. You know, you want to create a game plan, so when you are ready, you're ready to jump in full force.
All right, so there's a loan program.
Okay.
There's a loan program. It's called Home Ready SPCP. SPCP. Okay. There's not a lot of lenders doing this. Just actually 2 that I'm aware of in the United States. And it's an amazing, you know, a lot of people talk to me about DPA. DPA, do you have DPA? DPA is down payment assistance. Okay. And it's free money. It's literally free money. And who doesn't want free money, right? We all want free money. And here's a DPA with no catch. Now, there are loan programs and there are loans that do have a little catch, like such as there's one where you have to stay in the loan. You have to stay in the loan for 10 years to fully not have to pay back anything, right? So they'll give you a DPA, a grant of $15,000, but if you don't stay in the loan for 10 years, you have to give back a prorated amount. Now, that is not with the Home Ready SPCP, which I have in my arsenal of products. So the SPCP program is so cool because there's no income restrictions, there's no buying restrictions where you're buying or anything like that. It's based on someone who's buying the home. It doesn't have to be everybody, just one of the people who's the buyer of a home that's going to move into the home as their primary home, and that person is a first-time home buyer,
Okay.
and they have the credit score that's needed. I think it's 660 off the top of my head. I'm not sure. And it depends on where they currently live.
Okay.
Now that's a big one. People are like, "Oh, no, you mean where I'm buying?" No, I mean where you currently live. Where you live, because they use what's called an MSA, a metropolitan statistical area. And the government came up with these areas in the United States, and they said if you live in this area, whether you're renting a home in that area, and you're buying as a first-time home buyer. By the way, what's the definition of a first-time home buyer? Definition of a first-time home buyer is someone who has not been on the deed of a property in the prior 3 years before you go before you sign the new note.
So I could own a house for 3 years. I mean, sell it. So own a house
More than 3 years ago.
Sell it more than 3 years ago. Buy another house as a first-time home
And
buyer.
you're a first-time home buyer. Exactly. So a lot of people don't know that. That's
Yeah.
very important.
Yeah. Okay.
That's very important. So first-time home buyer, you live in an MSA. We look that up. It's the first thing when I talk to somebody. That is the first thing that I do for every one of my clients. I look to see if you will qualify for SPCP, because
Okay.
who doesn't want $5,500 of free money? And you don't have to stay in the loan for any period of time. So you get that $5,500. It's $5,000 free money and a $500 credit, appraisal credit. Yeah, that's how that works.
So
It's a great program.
So that's crazy. But they don't look at your current finances, right? So
No,
you could be
they-
renting. You could be.
No,
renting.
no, you have. Well, you have to be renting, right? Because you're a first-time home buyer.
Okay, but like wherever you're renting, right? So it's
Right, wherever you're renting, doesn't matter. Right.
All right, so that's all the time we have for today, guys. Thank you so much, Peter, for coming and
Thank you, brother.
going
Thank you.
over
Appreciate you.
what's hot right now in the market besides the regular traditional conventional FHA VA loans that we see on the day to day, right? So these loans, the hot ones that we're using right now, are for more self-employed, right? For more self-employed people who don't or can't show income, right? Who have a lot of tax write-offs and stuff like that, right? So this helps you still buy a home if you want to get in.
Exactly.
Exactly. Any final words?
No, just great being here with you. I'm always happy to tell people what I mean, sit with you and talk about loan products and anything that's going on in the industry, mortgage related, that I can bestow some knowledge. I'm happy to do that.
Amazing.
Yeah,
Amazing,
thanks,
man. Dealing with the best right here, guys. All right.
Appreciate it.